All right, this is time to get started. My name is Romain Danielou. Thank you for everyone that is on the webinar today. Very happy again to present our brand new portfolios July 1st. This portfolio is very special to me and to the LandQuire community. We're presenting a brand new mobile home park construction 7 minutes away from the brand new Stargate construction project, which is the largest investment made in terms of construction in the US history. For people that never invested in Texas, this is our fifth deal in Texas. We exited two of them, and today I will present the ins and outs of the deal. LandQuire, again, is a private equity investment platform that focuses on sourcing capital from US capital, but also a lot of our investors are offshore. And we're really excited to bring you on board if you never heard about us. Welcome. I'm just going to make sure that you guys can see my screen. Tick, tick, tick. Just going to make sure in the chat, if someone can text me in the chat, Paolo, if you can text me in the chat to make sure that we can see my screen. Okay, perfect. All right, so a little bit about this deal. We bought this parcel a year ago. We finished the entitlements. These lots are all 4,500 square feet minimum. We're looking to build a brand new manufactured home, mobile home park, on which today I have the pleasure to have the GC, the general contractor, fully licensed, that will be helping us to build this. And we also have the head of Titan, which is on the market in Abilene and for the last 8 years and has been selling over 150 homes per year. So we're raising $8 million between the land and the construction of this site. There's no debt. We're raising $250,000 minimum per investor. We have up to 35 investors that can join that club deal and the SPV. You're buying shares directly in the entity that owns the land. We're targeting a 1.8 equity multiple on your investment, a 48 months exit, and a 62% ROI on your cash at the refi. Again, we will fill this park in between 3 to 4 years, and the goal is to refi once we're fully stabilized. So like any other presentation that you have from LandQuire, you have the data room, the pro forma, the Google Map pin about the property, the construction plans, the planner link, which is a digital tool that we use to communicate with all our LPs all across the world to make sure that they can be aware of what's going on in terms of the construction, in terms of the absorption rate once we install the homes. We will also have a full-time superintendent on ground, and we will also have a camera where you can connect and make sure that the improvements are being done. We also have a 3D visit of a manufactured home for people that are not familiar. We have a lot of investors that come from the multifamily world and are not very familiar about manufactured homes. I will show you a little bit what are the 2025 manufactured home looking like. A little bit about LandQuire. We started 5 years ago. We raised just below 40 million in equity from 600 LPs so far. We bought land in 31 different states. We're focusing mainly in Florida and Texas at the moment for obvious reasons. I will go in details a little bit more right after in terms of demographic growth, but not only that, we have a lot of different KPIs that I want to show you. So our vision is to leverage through data. We want to address the housing crisis by creating sustainable and innovative land solutions that meet the city needs and municipal goals. We want to provide individual and also institutional investors with access to high potential alternative land investments in the US market. We buy acres anywhere between 30 to 50 to 500 acres, mostly in the residential world. We combine some of our parcel with commercial and industrial. We study the topography, the wetland, the utilities, the proximity to any neighbors, land use, development path, and we also provide a clear licensing in terms of the entitlement to make sure that when you invest, your money is ready to go to put to use. The exit strategy here is to refi and to keep the asset long term. I will explain that a little bit more in detail in a second. Again, we're very clear that in the US, but not only, there's a big housing crisis. The statistics says that there's anywhere between 2.3 to 6.5 million homes missing in the US market, with the salaries not increasing as much as the construction cost and the inflation. A lot of the people are now priced out of the market to become a homeowner. And this is why there's a big growth in terms of manufactured home demand, because we're talking about homes varying between $75,000 to $150,000 installed. Okay, so we're talking about $100 per square feet on average, compared to a stick-built home that will be above $200 per square feet. A little bit of our track record on some of the deals that we already exited. We added a data room that you can go on your free time. We have a summary with all the LPs, ROI and IRR, net of fees. And I'll be happy to answer more questions if you have in terms of our track record. I added some of the dealer brokers present in Abilene. Here today, we have the pleasure to have Hunter, the head of Titan. That is, I believe, the leader in the market in Abilene. He's going to tell us a little bit more. I will go a little bit more in his website. You will see some of the models that he is currently selling, as well as the financing and the deals. There's beautiful homes that you're able to buy at a fantastic price, especially for people making less than $80,000 a year with their spouse. Coming back to the presentation, the property will be acquired in the entity called RiseQuire Investment Portfolio 1 LLC. This is a 36-acre parcel. For people that are in Europe, we're talking about 14 hectares. The GP, which is the general partner, is LandQuire Management LLC. We have a 75-25 split post refinancing that will be applied, 75 for the LPs, 25% of ownership and distribution for the GP. The exit is targeted to be 48 months. We're bringing a brand new mobile home park on the market with state-of-the-art amenities. What I mean by that is that none of the park, and again, I'll let Hunter comment on that, we don't have any of the parks in Abilene that has any of the amenities that we're planning on doing. A little bit about the Stargate project. Stargate, again, there is a lot of articles online. I really emphasize, if you're going to invest in this project, please do your research online. They're talking about $100 billion to be invested in the project in Abilene over the next 7 to 8 years. There's already, I believe, 5,000 people and workers already on ground. I was on ground personally last week. I was able to actually get in the project and see a little bit of the magnitude of this project. This means that a lot of the workers right now are staying in hotels, and the goal would be for us to cater, especially that there's a lot of higher end salaries that are coming to Abilene that would be able to afford double wides and $150,000 to $200,000 homes, which would help us to actually boost our returns in terms of the lot rent. Again, to give you an idea here, we're trying to capitalize from the lot rent. We're not looking to actually own those homes. We're looking to be a TOH park, which is a tenant-owned home park, meaning we keep the land, we cash flow from it, and the people on top buy their home, and they use a dealer broker on ground. There is several dealer brokers, but the leader in the market, again, is Titan. A little bit about the construction plans. Like I mentioned, there is a gas easement that is running through the property. We don't have any flood zone. The access is provided here on the right side of the screen. where the amenities will be at the front side of the property. We're looking to allow the tenants to actually put fences on their property. A lot of them have dogs and kids, so allowing that in the HOA is very important. We want to allow people, obviously we're going to put a dog park, so we're going to allow animals. We're going to have a pool. We're going to have 4 different sports courts, which include soccer, which include paddle, which include pico, and which include basketball, half a basketball court. We're going to have a manufactured home that will serve as a clubhouse where people can get together. Okay, so the minimum size on the lots are 4,500 square feet. Some of the lots go up to 6,000 square feet, especially the corner lots. We're looking to sell 50 homes the first year. That's really what we want to do as a bare minimum, taking into account the normal demand that the dealer brokers would have without Stargate, and obviously with the influx of people that are coming in the city. Okay, a little bit of photos on what it looks like after it's built. This is a brand new manufactured home park that is in the San Antonio area, on which we're going to be doing very similar in terms of material quality. Again, take a look at, I added the link here so you can go on their website, but this is exactly what we're going to build. Why Texas? A lot of people are still a little bit not sure about whether they should invest in Texas or not. I can tell you, by having invested in this state for the last 5 years, this is probably the biggest pro-development state in the entire country. And I'm not saying that out of looking at articles online. I'm saying that out of actually doing business there for the last 4 years. All the cities and counties are looking to actually absorb the demand that they have in terms of people coming in. So in terms of the median home price, we've seen a big increase over the last 5 years, going from 260 to 320. This is the median home price, meaning 50% of the homes in Texas are already priced above $320,000. In terms of GDP growth, we've seen the highest growth out of the 5 states that are right below Texas. In terms of infrastructure investment, the cities and counties are actually investing in order to accommodate the people moving in. This is sewer, this is water, but this is also schools, this is also sports court. There's a lot of different things that the cities and county are investing in, and Abilene is actually following that demand. The Stargate project, you will see that they're talking about $100 billion at the moment. We're talking about 500,000 square feet buildings, and there will be 10 of them. Just to give you an idea of the magnitude, this project is built on 1,000 acres. We're not entirely sure about how many people will stay after the 7 to 8 year construction project. But what we're sure is that there is a big economy that will be built around that. Hunter was commenting the other day, once we were meeting in Abilene, that we could potentially see a 2x increase in the population of Abilene. There's roughly 120,000 people right now. And if we follow that, we would be at 240,000 in the next 5 to 10 years. Again, the first that will be building these data centers will be probably the first that will be leading a little bit the new gold rush, I would say, as they would have the computing power to lead all the project for software, but also hardwares that will be built in the future. We're talking about robots, and I'm pretty sure we're not far away from seeing a lot of the robots emerging in your home, but also in cars, and all the potential software that will be leading that behind that. In terms of project timeline, we're looking to raise the capital between now and the end of July. We have 11 people raising capital full time. We have at least 2.5 million of pre-commitment right now, with a couple family offices that are looking at the deal to take a larger chunk of this deal. This is an equity deal. There's no debt. There's no leverage, which means the risk of losing your capital is much lower than any other deal that you probably do in the multifamily sector, where you have an LTV around 75 or 70 or 65% on construction. Here, we're not looking to raise debt. We're not going to the bank. We're not putting any of those standard lender SBLC. We're not putting any personal guarantees, which allow to get right into it in terms of construction and save a lot of time. So the goal is to be done by the end of Q1 in terms of construction. We will be pre-marketing this site to have pre-sale done before the opening, to make sure that the 50 homes close to the amenities are sold and pre-sold before we open the park. We're looking to refinance the park at the end of 2029, where you will be getting your money back on top of the distributions that will start year one. So again, investor will get 100% of the NOI, the net operating income, which is the profit of the entity post-tax, year 1, year 2, year 3, year 4. And after the year 4, you will get a larger chunk of your capital back from the refinancing. And above the refinancing, we will be doing 75-25, meaning 75% of the asset after you pulled your money out will be yours on top of some of the distribution that you've made. I will explain you that in detail in the financial model in a second. So we'll come back to that. We'll come back to the cash flow statement. I added some of Jimmy's project. Jimmy, would you mind presenting yourself for a second and give us a little bit of background, since we're already on your slide? I don't know if you can hear me. Would love to hear you. Would love to have investors hear a little bit about how do you typically go about building this thing. I know this is probably a smaller project for you, but would love to hear you out.
Yes. So my name is Jimmy Fry. I'm the COO of Pressmont LLC. We are a general contractor currently working in 13 different states in the Northeast, Texas, and Florida. We primarily work on retail, large commercial, self-storage, and large developments. For this project, we would have a full-time superintendent on project. We would have a part-time project manager. We will have a site camera, and we will manage all the subcontractors from pulling the permit until getting a CO for the end of the project. We do all our own quality control, safety, everything is in-house. We have many certificates and qualifications that if anybody needs, we can definitely supply that information. We have roughly 30 employees that work for us, tight-knit family raised company. And yeah, that's about it.
Great. We'll come back to you if we have any questions in terms of the construction of this site. I'm going to go back to share my screen so we can go above the numbers. Great. So some of the comps were added in the presentation for you to see a little bit about the price per square feet on these manufactured homes. Some of them are older models, some of them are newer models, but I really emphasize for you to go on these links. You can click always in the presentation at the bottom. That will take you directly to those comps. In terms of the investment process for every club deal that we have here at LandQuire, we do a full 100% 360 project monitoring with digital tool, camera, as well as communication 24/7 on our investment portal. We have a legal follow-up in terms of your LLC creation if you need some help for that. We will provide, obviously, all the accounting and financial monitoring. You're buying shares into that entity, which means we will provide a K1 at the end of the year, so you can give that to your CPA for the US people. And obviously, for people that are offshore, we can talk about that as well, but you will need the K1 as well. Okay. This is the planner. So this is an example about the digital Microsoft tool that we use to follow up on construction. Some management notes that I'm not going to go into. A little bit about our executive team. Me and the co-founder Thibaut Guéant and our CEO Daniel Charleton. If you have any you need to meet us, feel free to reach out. We also have a lot of our investor relation team on the screen, our CFO, our senior data management officer. I added Jimmy and Hunter as well, and our project manager, Chris, that will be working hand in hand with Jimmy to make sure that we stay on timeline in terms of construction, as well as absorbing and selling homes post-construction. A little bit about the disclaimer. I really emphasize, again, this is investing, there is risk. Ask questions. This deal is not made for everyone. We are doing an SEC Regulation D 506B on this deal and 506C. We're looking for accredited investors. If you're not sure if you're accredited, please reach out and we'll make sure we can process the accreditation. So that's about it in terms of the presentation. I'm going to go over the data room very briefly with you guys so you know how to look for documents. We have the amenity design in the deal. We have videos and pictures about the property. We have the property card. We have the purchase agreement for the land, the construction plans, the survey, and obviously what you're probably looking for, the pro forma about how much we're looking to make on this deal. So I'm going to go over it right now. Okay, so the way you want to look at it, we did an optimistic, a realistic, and a pessimistic scenario. Talking about the realistic scenario, we did different sections. Section A is the project cost. Section B is the financial projection, with Section C, the cash flow projection, and Section D, the amortization schedule. In terms of costs, you will see that the total cost about this project, land plus construction with the fees of the GP, is right around $7.9 million, which help us to build 206 pads. If you divide 7.9 million, you get to 35,000. If you divide 7.9 by 206, which is the amount of pads, you get to 35,000 per pad all in. Okay, so this is really what you want to look at. We are able in that project to build land plus construction right around $35,000. And I can tell you that Jimmy has been going back and forth with a lot of the subs. We'll talk about that in a second. So this is full equity, no debt. And right now, we're going to look at opening the park and rent these pads at $450 per pad. And the goal is to sell 47 homes the first year, 60 homes the second year, 72 homes the third year, and we'll be left with 27 homes right around 2029 in order to make sure we can refi by the end of the year in 2029. Our goal is to fully refi before the end of 2029. So I added the NOI of the entity with some of the profit that we're looking to make from selling homes. You will see that we're holding some of the NOI the year one to build some reserve. But then year two, we're looking at having 14% ROI on your money. Year three, 17%. Year four, 12%, because we're not selling as many homes. And then at the end of 2029, you will see that your entire capital will be brought back through the refinancing. How does it work? We're looking to have an NOI that is right around here, the park stabilized net operating income, which is the gross rent minus the expenses that are below. You will see all the expenses that we will have to run this park. So you're looking at 1.2 gross, 900 net, and we're looking to refi on a 6% cap rate, which would give us a valuation right around $15 million for this asset. We're looking to pull out 65% of the value of this asset on a 30-year mortgage fixed rate at 6%. You will see that in the optimistic scenario, we're looking at 5.5%. In the pessimistic scenario, we're looking at 6.5%. Again, we are believing that if we would refi today, we would be able to get a 6% rate on a 30-year mortgage fixed rate. We're hoping that the rates go down, and that would obviously help us in the future. So that means out of the 15 million, we would put out 9.9 million, okay? And we would return 75% of that to you on top of all the NOI that you've made from 2026 to 2029. Total, this means you would make a total ROI of 62% and an ROE, which is a return on equity, of 91%, which is right here. So someone that put $1 million would theoretically get 1.62 million, 1.6 million out, but you would still have some equity that is in the deal. Again, you are free to sell your shares after the refi if you want to on the secondary market, but our goal as a company is to help you build wealth through land in the long run, meaning we are counting on keeping this asset long term because we are of the belief that with the inflation, we would be able to increase rent over time and optimize the expense ratios, knowing that we are on public sewer and public water, in order to actually give you a net cash flow of 1.9% of your investment post refinancing after you made your 62% and you kept some equity in the deal. We would be able to give you similar to what's called an annuity dividends once a year, okay? Which means that you made 62% on your money, you're already out of risk, you brought your money back, and the goal is that you keep some equity in the deal so you can generate some annuity every year on your investment, okay? One KPI that is very important, the yield on cost. We are on this project bringing an 11% yield on cost, which is very, very hard to get in the construction world. I can tell you that on this project, we're getting 1.2 million in gross rent out of an $8 million investment, which is, to my opinion, in the construction world, amazing. Okay, in terms of work, there's a lot of work behind it, and this is why we need to bring the right people in this deal. But what is amazing is that on a public utility park, we will be able to get a 30% expense ratio compared to a 40% expense ratio on a private utility park. So this is saving us a lot of costs in terms of management. After we refi, we will have a full-time property manager on ground to help the dealer brokers, obviously, to sell homes. Okay, so this is a little bit in a nutshell for the numbers. I talked to you guys about the market. I talked to you guys about the data room. I talked to you guys about the team. I'm gonna present briefly Hunter, that is local to Abilene, and that's gonna tell us a little bit about him, a little bit about his business, and how we're gonna partner up on this. So Hunter, if you can hear me, I would love you to introduce yourself and tell us what's going on in Abilene right now.
Yeah, so my name's Hunter Nall. I'm the general manager here at Titan in Abilene. I've got about 8 years experience in this industry, and it's an exciting thing to see something like this coming to my hometown. I was raised here my whole life, went to school here, and then I left after I graduated high school, and was quickly returned to take over a store here, and quickly realized that it's not the same place that I left. And so, with projects like Stargate coming in here, a lot of families, this is a family-oriented place. And so when people come here, they're starting to plant roots. So these people that are coming for this project, they may be leaving, but the kids, they're not. There's 4 universities here in Abilene, so there's great schools. The economy is thriving. The real estate market is one of the biggest reasons why I came back to Abilene. It's just because the price per square foot and what your dollar gets you here in the Abilene area is so much more than everywhere else in Texas. And so from an investment standpoint, I'm also a real estate investor. I honestly can't think of a better investment than what we're proposing here in this Abilene area. And I would have said this would have been the best thing to happen to Abilene before the Stargate program got here. And now that we know and they've announced the Stargate's here, it's as big of a project as it is. I would still say it's just the gravy on top. So this is the missing piece of the puzzle for Abilene. Affordable housing. Most people in this area, that's what they're seeking, and there's nothing that's going to get them what they'd be happy with. It's really less than $250,000 to $300,000. Here, what we specialize in is building products from 3-bedroom, 2-bath houses that start at $65,000 and they go all the way up to $250,000. So we have the creme de la creme, as we say, at that super high end price point. But then 75% of our business is below that. They're going to be, $100,000 to $150,000. So, we have the financing here. We offer aggressive rates. We have where all of our clients are payment buyers. So a park that's like this, I did some touring yesterday of properties around Abilene. There's nothing in our area that even if they were to purchase a half acre or quarter acre of land with a manufactured home, the aesthetics and what they have access to is slim to none, and they're going to be paying $2,300 to $2,500 a month for that. Whereas now we're proposing we have a facility where they're local, they're in town, they have access to the school districts, they have access to the pools, they have access to the rec centers. It's a gated community, so they have fencing for their dogs, and it's just a better overall place for them to call home. It's more of a peace of mind. And we're going to be able to present that to them with all those advantages at a lower monthly payment. And so it's really a no-brainer for me. So, I'm excited. 200 pads is exciting. At Titan, we are the #1 retailer by a long shot in the surrounding counties. One of our stores right now is #1 in the state of Texas. And so we really do pride ourselves here at Titan at being really dominating the market. Really, our goal is to kind of honestly put most other retailers out of business because we provide an experience to people where it's just it's a higher level of frequency between helping them save $1, helping them with a great buying experience, and now being able to present all of those opportunities to them, as well as now a home site that they don't have to physically own or go out and obtain and go through the headache of owning. So it's really a no-brainer, and I'm very excited to be a part of the project.
Great, Hunter. Can you tell us, in terms of sales, what are you doing currently? What are your goals for the year? Do you have a lot of people obviously coming with their land and then looking for a home? Can you tell us a little bit more about your
Sure.
avatar, your client avatar?
I would say, right now as a store, we average anywhere from 12 to 15 homes a month. That's just with people bringing us properties that they already own, putting into the couple of parks. We may do 2 or 3 deals in mobile home communities now, but that's because we've already filled up the parks and there's no access to a park here locally that really feels safe to a client, or that really they can have a fence and things like that. So just with 3 salespeople right now, and the small amount of park business, we're still averaging this month as a company. Just as an example, we finished #2 out of 12 locations, and so we're really averaging a higher volume right now with just minimal effort, I would say, and not a tremendous access to land in this capacity. So once we take this into account, there's no reason why on a monthly basis, I would say I'm really trying to double my volume if possible. As a store, if I have 2 more salespeople on here, I should be doing about 20 homes a month is the goal. If you put that on, just a calculator, and you start breaking everything out, if you take the 20 homes times 12, 240 units a year that we could potentially be doing. So that may not have been possible 2 or 3 years ago. And today I look at it and I think it's absolutely possible between a park opportunity like this and some of the land opportunities that we have just around the surrounding area.
Yeah, I mean, what do you see in terms of that's the regular people from Abilene now, or people moving in, but do you see some people from the Stargate project already?
Yeah, right now I would say probably 20% of our business is coming from Stargate, and that's just the initial people that have come in. They have so many people coming into the project right now. Honestly, what we've been trying to do is just get in front of the executives to really present the opportunity that we have affordable housing for these people. So right now, it's really just been word of mouth, kind of getting through the red tape of a $1 billion project has been relatively difficult. However, I have some local connections that are helping me get that. But I would say if we can get half of our business coming from Stargate just to fill this facility, I think that's very feasible with over the next few years. So I would say right now, 20% we've got probably another 5 to 10% that between referrals alone that I think we'll see over the next 60 to 90 days because the word is spreading that we are here for them.
Yeah. Obviously, our park is going to be 7 minutes away. So we're hoping that it's going to be more like 80-20, 80% coming from Stargate with people with higher monthly payments, which hopefully we can price the lots more in the 500 to 550 with those amenities. But yeah, looking forward. Just an idea, the mobile home park that I presented, the photos in San Antonio, these guys are already at 600 a pad. So my guess is that we're still in the secondary market for Abilene, but it could well be catched up over the next couple of years.
Absolutely.
So that's that. We're gonna try to take some questions from the audience. So I'm gonna go back at the top. We have the first question here. The slides are not clear. Would you be able to share the slides later via email? Yes, we will make sure that everyone that took the time today to be on the webinar will be emailed. As long as you subscribe, you will receive the presentation. Again, this is just a Canva link or a PDF, and on the page 2, you have all the documents. You can click on the data room, the pro forma, a 3D visit of a manufactured home, and so on and so forth. In terms of what is the number one risk as a contractor when you're building? How do you make sure you stay within the budget? So I guess we'll try to bring back Jimmy. Paul, if you can bring back Jimmy as a host, I would love to have you answer that.
So before we go and start construction, we would have an executed contract with Remain or the entity. And when we go under contract, we have a full set of plans that we've reviewed, we've priced, and we are under contract with our subcontractor. So we take 100% of liability, and our scope is everything that is on that set of plans that have been approved by the municipality. So really, the GC is taking all the risk. The only risk that could potentially come back to Remain would be any unforeseens. There's a power line running through the site that nobody knew was there. Something along those lines, which is very minimal.
Yeah. No, that's a good answer. I would add on top of that out of the 5.2 million in construction horizontal costs we have discussed over the weekend with Jimmy, and we're looking to be right around 4.7 all in, which would help us to have a $500,000 contingency. We're finalizing the latest details, but Jimmy has been doing a great job to go back to subs and really to make sure that we hit the numbers that we're trying to hit in order to get the returns that we need you to hit. Can anything arise that would be a cost killer and that was not in the financial projections? Yes, there is always a risk that we miss something, but the reason why we use a GC is that GC works with the engineer and the land planner to make sure they take into account everything that was proposed at the county level in the plans, the construction plans, right? So that's the way you make sure you don't forget anything.
Correct. And to speak on that a little bit, Romain, this type of project is mostly just all site utility works. It's very minimal. There's very room for error or misses in utility work.
Yeah, we're not building Stargate,
Right.
which would be, I guess, a larger contingency on that. Can I get investor from the UAE and Pakistan? UAE, we have a lot of clients from the UAE. Pakistan, I would have to double check. I think there's a couple countries that cannot invest in the US, but I guess, Julien, I see you are answering to Umair and Nawaz. So if you can give him a message and check with our CPA, if we are allowed to get some Pakistan investors. I don't recall if we have investors from Pakistan. Ramsey, does international investors has to travel to the USA? No, you do not. This is all done remotely through LandQuire platform. This is why we have a GC and a sales team through our dealer brokers on ground. The land is already under control because we bought it a year ago with our investors that invested in the entitlement risk. Now that the entitlement are done, they're going to get out and potentially reinvest in this construction project. But in a nutshell, we have 95% of our investors that invest out of the US and never come to the US. They're just looking to have diversification in alternative investment. First of all, because they want to diversify in the US dollar. A lot of the people have some euro. The euro right now took 14% above the dollar since election, which is great for people having euro. But other than the currency change, people love to diversify in the US economy, and more particularly in the fastest growing state in the US, which is Texas. Let alone investing right next to the largest construction plan and project in the US history, which is Stargate. This is, I think, for every investor, fantastic. Do international investor pay taxes on this project? Our CPA, international CPA, was not able to join today, but we have from him a 100% free consultation if you want. So we always do a CPA call, so a US CPA call, and we plug in with your accountant in your respective country to tailor your investment strategy, whether or not you want to invest personally, whether or not you want to invest with an international holding company, or if you want to invest with a US company, we can obviously create either a C Corp or an LLC that is transparent, depending on the amount you invest and depending on your strategy. So anything related to taxes, again, there is some favorable terms in the US tax system that allow you to cap your taxes at 21% through a C Corp. But again, it will depend on how you want to structure your statute and your LLC. Julien, relocating to the US is not required. Okay, thank you for answering that. Fad Siddiqui, how confident are we that we will get the permits? Is there any risk there? So we'll bring Willem if we can pull. Willem is our head of entitlement. He's the person that worked on the entitlement, and I'll let him comment on that. Willem, if you can hear us, that would be great to have you. Let me see if he can join here. We'll just wait a second. All right. Willem is not on the call. Okay, so I'll answer for him. But basically, the entitlements and the construction permits are all done and ready to go. We're what's called shovel ready. If you have any questions in terms of the entitlement, we can send you all the plans, and it's in the data room. And as well as if you want to talk with our engineer, land planning firm that worked on the project. It was actually a pretty easy process. It was a 9-month process. Typically, we take anywhere between 12 to 14 months in Texas. This is probably the fastest entitlement project I've done. Let me see. Is that Willem that is coming? Someone was brought in. But anyhow, yes, entitlement done, ready to get started. The goal is to be done by the end of Q1. We are super excited to have you with us. If you have any questions, Paul, if you can drop if you can drop the link of the presentation in the chat so everyone has it there, so you can save it on your browser or share it to your accountant and financial advisor or attorney. The PPM in USA, which is the private placement memorandum and unit subscription agreement, are sent on demand if you have interest to invest in the deal. So Ingrid is our head of admin, and she will be sending that to you. We're looking to close the raise by the end of July. And again, I want to thank everyone that is part of the team and everyone that will be joining the community. Any last comment, Hunter, Jimmy, anything that we forget in terms of important points on that specific deal?
I would say maybe the only thing that I want to transfer over is just that any of the infrastructure that's required after Jimmy completes his project, those are the costs that the consumer that we would be putting into that facility that they're going to incur. So there's two separate types of utilities. There's the utilities that Jimmy's going to present and build, and then the utilities that we're going to put in to connect to those existing utilities that our consumer would then incur. So all those costs is transferred over to the client.
Yeah, that's a good point. Different type of utilities between the construction and then once the park is up and running. We're going to have an app as well for the community. There's different apps on the market now for these kind of communities where they'll be able to obviously reserve the paddle court, the soccer courts. They're going to be able to reserve the gym if they want to privatize the clubhouse. These are some of the services that we want to bring to affordable housing. And I hope we'll be bringing a real good service on the market and make people happy on ground. Besides the investors, making investors money is one thing, but building a community is another. So thank you everyone for showing up today. You have the access to the brochure in the chat, and we're looking forward to have personalized calls if you have more questions. Thank you, everyone. Talk to you soon. Thank you, Hunter. Thank you, Jimmy.